Federal Reserve Chairman Jerome Powell commented on the U.S. economy in general and inflation in particular after PPI data came in well above expectations this morning. Today we will explore the economic concerns he discussed and forecast its effect on gold and silver. Hi, and welcome to Minuteman Precious Metals, where it's my goal to enhance your financial preparation and prosperity and motivate you by tracking my personal stacking adventure. Thanks to all my new and returning viewers. Please like and subscribe if you enjoy today's content, and ring that bell if you'd like to be alerted when new videos are available. I appreciate your views, but I really need your likes and subscriptions to grow this channel. Thank you for your support. As Federal Reserve Chair Jerome Powell pointed to the progress that was made on inflation in 2023, he also acknowledged that this year has not continued that positive trend. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, higher than we expected. We did not expect this to be a smooth road, but these were higher than anyone expected. What that has told us is that we will need to be patient and let restrictive policy do its work. Powell was challenged during the interview on whether the recent lack of progress means that the Fed funds rate may not be high enough, and a hike may be necessary to bring inflation back down to the 2% target. In reaction, he stated, "I do think it's really a question of keeping policy at the current rate for longer than had been thought. I think by many measures, the policy rate is restrictive. The question is it efficiently restrictive? And that's going to be a question that time will have to tell." In my views, these statements should be concerning to stackers. Discussions on higher rates for longer may seem better than the possibility of a rate increase, but this rally was built on the promise of 4 rate cuts in 2024, and that has not materialized. I'm very surprised that gold and silver markets did not turn down on this news. Powell was asked specifically about high producer price index readings for this morning and whether he sees risk that inflation could become a bigger problem in the United States than it is elsewhere. He stated, "I would say it's actually quite mixed. The headline numbers were higher, but there were backward revisions as well. We are, of course, taking it apart and looking at it. I think markets and analysts are looking at it as, I would not call it hot, I would call it sort of mixed." But the U.S. Producer Price Index for April came in very hot by other people's estimates, up 0.5% month on month versus expectations for 0.3%. The core PPI rate, excluding food and energy, was also up 0.5% in April versus expectations to be only up 0.2%. The mitigating factors Powell discussed was the March PPI numbers. Those were revised down to minus 0.1% from the originally reported being up 0.2%. If not for this revision, the April PPI report would have fallen squarely in the camp of U.S. monetary policy hawks, who want to see the Federal Reserve hold off any interest rate cuts or possibly even raise rates. Stackers can see, based off his comments, Powell at a minimum wants to keep rates neutral until inflation is brought under control. Powell discussed the state of the large U.S. budget deficits and the growing national debt. "I think it's utterly non-controversial to say that U.S. fiscal policy is on an unsustainable path," he answered. "Not that our fiscal position itself is unsustainable, but the path is unsustainable, meaning that we have full employment and we are running big structural deficits. We're going to have to deal with this sooner or later, and sooner is a lot more attractive than later. Remember, I'm not a financial planner, but my suggestion to you is to start preparing for the fallout of a more restrictive government now. Invest in sound money, be your own bank, live within your means, and become less dependent on government programs, tax breaks, and incentives. Don't look backwards for 2.5% interest rates. Prepare for higher for longer interest rates. They may become a reality." Over the long term, the future for gold and silver looks bright. Powell's short and long-term view of the national debt should encourage stackers to stack harder, as our debt burden will at some point have consequences for the US dollar. I think we can already see the cracks in the dam with the expansion of BRICS, the acceleration of the collapse of the petrodollar, and countries choosing to invest in gold reserves over US Treasury bills. More important economic news will be released tomorrow with CPI results. I'll review that data and update you on where that may lead gold and silver. Let's call it there. Thank you for watching, and remember, time is your most valuable asset, and I appreciate you sharing yours with me. Minutemen 6, signing off.